Hi all, this is a review of my Kiwi dollar sell trade I took this week. So my idea was I have this 15-minute range and I am seeing the buyers come up. They don't come up in a very strong way from this area, or at least that's what it seemed like to me. And this was a bit of an error in judgment, which I'll explain a bit later. But my idea for the sell was mostly that, okay, it's near the top of the range and I'm seeing high volume sell reactions, high volume reactions near the top of the range by the sellers. So generally I have seen that when there is a condition, when this condition is fulfilled, I have noticed that generally the sell does happen. But this condition, what I overlooked was that is not a sufficient condition by itself. I had overlooked the other condition that buyers have to actually be struggling up, or the sellers have to clearly take out buyer support and retest, and then the sell may happen. Now in this case, I think the fatal flaw in this trade was in this particular section of price action. Look, I know that this move up by the buyer was quite smooth and strong, but especially I think in this section, when this buyer came up very strong, no wicks on the bottom at all, just very strong, came up, tested this area it just broke out of and then went up. I think this was the key. I needed more confirmation for the sell if I was to take the sell over here. I needed to see that this was taken out or not attempted to sell at all, because this candle specifically over here I think was the key. This was too strong for the sell to be worthwhile over here. So in my trade, my entry for this trade was based on the lower time frame over here. So I saw the sellers come down over here, buys come up, the sellers come down hard again, and that's when I entered. Stops above, I was feeling a bit confident about this trade because I saw that the sellers were reacting from this area. But what I had overlooked, of course, was this section over here. No supports had been taken out just yet. It was just hanging around. So immediately after the trade, the price just went up, crept up, and it went up very, very smoothly. Very smoothly. There was no pullback whatsoever after this period of buyers building up their positions. I did not exit or do anything around here because I thought, well, maybe the buyers will just do one more test and come down. But I think this was another flaw in thinking, because there was reason for me to believe that when the buyers build up positions over here, they are likely to break this area, because we have sellers building up their positions over here and making a lower low, doing a test of this breakout area and then coming down. So this test is very clear from this sharp reaction that this was most likely just taking away sell liquidity at this level, not adding any sell liquidity. And therefore, if the buys were to go up, there are higher chances for them to break out, since there's less sell liquidity at this level. Some of it had been taken out by this sharp reaction over here. And the sell liquidity was initially built up in this area. So if the sellers were truly to resist the buyers over here, they would need to have rebuilt sell liquidity over here. That was my thinking. That is my analysis. That is my post analysis now. But that is what I overlooked. So buyers came up very strong, but I did not exit. I did not exit because for two reasons. Number one, I really don't like exiting on one smooth swing, and I want to see how the pullbacks come in, and I want to see failures. I like entering and exiting based on that. That's reason number one. Number two was the correlations were telling me that New Zealand weakness was the right idea at this time. it was just the wrong pair because the US dollar was not working so well. So I did not exit the trade, and in fact I actually extended my stop loss because I was confident of New Zealand weakness. And looking at New Zealand USD, Aussie USD, and Aussie New Zealand side by side during this time, I found enough evidence for me to believe that I can extend my stop losses beyond my initial planned limit, but still within my maximum risk limit. I extended my stop losses on an as-needed basis until I saw some sort of reaction by the sellers. I just wanted to see how the sellers would come in. I wanted to see what the sellers would do when a pullback comes in. So once that happened, I saw that, okay, the sellers were just hanging around here and then sharp move down. That gave me a bit more confidence. And then buyers hanging around, sharp move down again. This gave me a lot more confidence. And around this time, I thought, maybe should I cut the trade or not? But looking at the correlations, and unfortunately I did not take a picture of the correlations to give the full recount of it. But basically, from looking at the correlations, what I was seeing was in this section, I was looking at Aussie Kiwi and Aussie US. So I wanted Aussie Kiwi to go up because that would be in line with my New Zealand weakness thesis. So New Zealand weakness was the main thing I was trying to trade in around this time. It was not US dollar strength. For that reason, even though Aussie Kiwi was going up, I knew that Aussie US would also go up if that thing is driven by Aussie. But my whole idea of and my whole correlations analysis was pointing towards the fact that Aussie New Zealand would go up more than Aussie US because New Zealand weakness was a key driving factor. So once I had confidence in the fact that New Zealand weakness was the biggest force in this period of time, bigger than both Aussie strength and US strength, that's when I believed that this had good chances of going down even further. So it actually went down, and I think around this area is also when I took, after this analysis that New Zealand weakness is what's in play, I took a trade on Aussie Kiwi that I've covered in a previous video. And then once this came down, I exited the trade at close to my entry area. And this, I think, ended up being the right decision because I was already exposed to New Zealand weakness in the Aussie Kiwi trade. So I just ended up with basically minimal loss in this one, or no loss in this one. So I'm very happy with how I managed the trade, looking at the correlations and looking at what truly was a driving factor in this time, New Zealand weakness or Aussie strength or US strength. And the reason I picked Aussie to look at was I had confidence in New Zealand weakness being the major force. So I was looking at Aussie Kiwi to gauge when I could get onto the better pair to trade New Zealand weakness on. So that's my analysis for this. I think it was a poor entry, absolutely poor entry and poor choice of pair. Just looking for a trade from some easy support resistance reaction sort of thing, which is just bad, and I did repeat this mistake on the same day. But my management, I'm very happy with the management of the trade, especially how I read the correlations and that sort of stuff. Okay, so that's all. Thanks, and comments and questions are very much welcome.